I'm sure your phone was ringing off the hook yesterday from clients. You're probably thinking about it yourself. Yesterday, what we saw, the tech sell-off, really kind of spurred, it seems, by Alphabet and some weakness in ad spending. Do you believe that's the beginning of a trend, downside momentum?
Well, it's really started 2 weeks ago when you had a very soft print in CPI and PPI. And by the way, that pretty much locks in PC to be either 0 or 0.1 and year over year 2.5. So you really made the September cut virtually certain. And that kicked off a rotation and kind of a hedge fund meltdown because they were too long tech and too short value and income and small caps. And so we think that trend will continue through the fall. And that's why we're recommending more conservative value stocks and dividend stocks.
Okay, so you say it started with an inflation report, kind of led to a shift in investor sentiment. One thing I want to talk to you about is NVIDIA. So many times this year we talk about NVIDIA really leading the market. If you look, over the last couple months, it's lower, in the red, big change from what we saw earlier this year. Also on a technical level, it's fallen below its 50-day moving average. It's just about to hit its 100-day moving average. In your mind, is that a sign that we're headed towards this correction a lot of people have been talking about because of just the influence of this stock and the concentration of these mega cap tech names?
Well, we do think that there are momentum trades, and we actually were very positive on NVIDIA, but it got close to our target, which is 145. So it's pretty fully valued. So then, therefore, the bar is high. So that's the issue with tech, and we saw that yesterday. You have really high expectations, tendency to disappoint, at least relative to expectations. So we prefer Amazon. They don't have all that hype. They're doing cost cutting versus some of the other big cap tech are spending more money, like Google. Okay. So, yeah, we do think that because of that run and high expectations, there's a lot of risk in tech stocks.
Jay, we don't want to leave before we get to your picks. One of them is Boston Properties. This one was interesting. Shares are actually down about 4% year to date. Dividends almost 6%. Why buy this stock right now?
Well, this has been a non-consensus call all year. It's one of our largest holdings in ICAP, which is our large cap dividend fund. And we have a non-consensus call because we think investors are focusing too much on low-quality office space. Boston Properties is the premier developer of A-plus office, and that's actually doing really well, particularly here in New York, Boston. So there's a gravitation towards these super high quality, and if office rates go lower, you should.
Bit of a contrarian call, Jay.
Very contrarian.